right, we are back for another episode of the BLD Financial Podcast, and in today's episode, we have our good friend Ryan Valente. Ryan, thank you for coming.
Thanks for having me, man. Good to see you.
Yeah, likewise. For anybody who doesn't know Ryan is a missing middle developer. He has physically built the buildings. He knows all the intricacies around and pain points around actually going through the development of these things. So we thought it'd be great today to sit down, have a conversation about the reality of actually building in the city, what you're doing, where you go, and how you did it. Why don't you start off by just telling people, how you got here?
Yeah, so how I started in construction. I have a pretty long history in construction. I actually started in custom home building back in the day. I've been building for about, at least 15 years now. So started in custom home building, and that was big. When the economy was booming, everyone wanted to build a custom home and spend a stupid amount of renovation. So I come from more of like the high-end kind of home building space, naturally transitioned into doing my own builds, did a few, flipped them. And then my business partner and I, Madison, who you know very well, we did a flip in downtown Toronto near Trinity Bellwoods. We actually bought it just before COVID. And as we were like halfway through the project, COVID hit. We were freaking out. We thought we were going to lose all our money. Like, we're screwed. This is the worst thing that could ever happen. And then the real estate market shot up and made more than we ever imagined we would on.
And then it was the best thing that it could ever happen to you.
Yeah, we're like, this doesn't make any sense, but we'll take it. And so after that one, we kind of naturally transitioned into doing rental properties just before CMHC came out with the MLI Select program. So we honestly just kind of stumbled into it. We were going to do another flip, and then we saw the market was turning. We're like, this actually might make sense to do rentals. So we transitioned into building a fourplex because we had bought a property at Queen and Ossington area. We're blown away by the rents they were getting in that area, and for not great product either. So like, why don't we just build a multiplex that kind of looks like a custom home? And ended up doing pretty well on it. And then we naturally transitioned into doing a build through CMHC and the MLI Select program, which has its own challenges, as you know. So that we did a 4+1 with 4 units in the main house and laneway in the back. Got that into CMHC. And then right now we're building an 8-plex very close to there, doing that through CMHC as well. We're able to get in an all energy efficiency on that one before they brought in the affordability changes.
Nice. And
now we're working on doing even bigger ones. We're trying to do we're in the process of doing an 18-unit build in High Park. So 2 semis side by side with garden suites in the back. So it'll be 7 units in each semi at the front with 2 units in each garden suite at the back. So we're just waiting for our committee of adjustment approval on that. So yeah, we're trying to do bigger and bigger each time.
That whole transition is kind of the transition we see for most people in like the growth phase. Get into the 4s, and then the new density allowances allow for 4+1s. Go through all the pain of that and figuring out you could probably just do it larger at scale for the same amount of pain, and so on and so forth. It's also like an economy of scale situation too in Toronto. Like if you're going to go through the process of actually doing it, why not be able to get more rents?
Exactly.
To be able to make that happen. Some of the challenges that we see with our mid-sized investors and developers are different than what we see with our institutional developers. The ones
for sure
who get massive equity checks, like you're realistically, I guess I'm assuming for the first few, you put your capital on the line. Like that's
you got it.
The risk to be able to do that is much higher when it comes to smaller investors and developers. For your next projects, like your bigger projects and stuff like that, are you guys like raising capital? How's that?
Yeah, we raise capital from just high net worth individuals. When we first started, it was very difficult to raise money. Now it seems to be much easier. For like the project size we're doing, it's definitely easier to work with like 1 or 2 guys that are high net worth guys who understand the process. It's funny because when we went to people to try to raise money, people either got it right away, or they're like, well, when do I get my capital? They're like, when are you selling? We're like, well, we're not selling. We're trying to build a portfolio. A lot of people couldn't wrap their heads around it, but the people who did were like, what, this is an amazing deal. Like when you build through CMHC and, the financing options that are available to you, it has its challenges, as you know, its headaches. But at the end of the day, like it's a great program. It's the only way these projects work, really.
especially if you're borrowing outside capital and you have to be able to get back to your investors, like you're stuck with the decision of either trying to get an investor that's gonna be with you guys long term, which most probably don't. They want a pretty immediate return on their money. And the only way to really do that is to get into a higher leverage product where you can get, 95% of your costs back, pay them back out, hopefully get a little bit of extra equity back out for you guys. I mean, you're gonna have some management fees in there during the project as well too. But I mean, CMHC, I mean, we've seen it on our side, like MLI Select from the start of COVID when rates were super low and then obviously rates shot up, like the popularity of MLI Select really, I think, came of almost like a saving grace for a lot of these projects where guys were just like, I don't know how else to get on my project other than taking, this insured. And then once MLI Select came out too, and just how competitive that is, people just wanted to get in that and were gobbling those up on their projects. And now people won't even look at a project unless it can't work with CMHC. Like, 75% with a bank, at a decent rate isn't good enough anymore. It's got to be 95%, has to be under 4% on the interest rate and 50-year AM or it's not a viable project.
It's like all those burr investors who wouldn't do anything without getting all their money out, just transition into multifamily, and they're like, nah.
It's crazy because typically you would never find a real estate deal where you get all of your money out and you still own the property. So it's almost kind of like a fairy tale when you think about it. It's like you should still have some equity in the deal.
100%.
Right? Like it's absurd to think you're going to get all your money out and still own the asset.
Well, I think that CMHC, has a disconnect. We actually chatted about this a little while ago. Is just the disconnect between bureaucrats and people who are doing it versus like the people who are building it and the boots on the ground. And when they created a product, I'm sure they sat there like, man, this is a great product. It's got like energy efficiency, affordability, accessibility. 10%, 15% of the people are going to use this product. This is going to be great. And then 95% of all applications go towards the MLI product, and they start filling holes like Swiss cheese into this product. They're like, every one of these investors have found a loophole to be able to, operate in different parts of the market. And I think that they're realigning. They're realigning, obviously, with rule changes and policy changes to maybe make it more push towards affordability. There are some rumblings again that there are going to be some rule changes around just the energy efficiency and things like that. But I think it's really like for a market overall, it's important that the sophistication level of like a developer now understanding products like sophisticated institutional level, like financing products like this is kind of like a requirement now. Like looking at projects, even pre-existing ones as a whole, like understanding how you get your money in, get your money out. It's just created a much more sophisticated developer, and the barrier to enter is now so much higher. If you're looking for a scalability play, which essentially means you have enough income that's going to cash flow the debt you're looking to take on, you're not cash flow negative, you're probably at least 5 units in the city minimum. Your barrier to enter is $1 million in cash or equity to be able to get something built. Your knowledge level is spending hours on understanding how this stuff actually works. I think you're going to see like just a massive transition. People either just going to give up or they're going to become LP partners.
I don't know if the barrier to enter is higher. I mean, like, I think the lenders are looking at it from a stricter standpoint, but if you're building, $2 to $5 million projects and you have 5%, like you're 5% plus, some additional CapEx, but your barrier is almost lower from like a capital requirement. Obviously your experience with CMHC, if you want to self-build, has to be a little bit higher. You could go and hire a builder, but I think it's gotten a little bit easier, which is why the lenders have gotten a bit more strict. Because you take a look at some of the big projects that have crashed. You got guys who have been like lifelong builders that are following through on some of their projects. Now a lot of those are obviously condo projects and not necessarily purpose-built, but the risk is there nonetheless. And lenders obviously price smaller projects higher for a reason. There is a risk that comes with it, but I think maybe again, barrier to entries is a little bit less, but the underwriting has become a bit more strict from the lender standpoint for sure.
Well, I mean, the rental achievement holdback now, you're 25% on project costs. It costs you $4 million to build something in the city.
That rental achievement holdback, in my opinion, is in because you have newer investors that are borrowing all the money and then having to jack up all the rent just to be able to get it all out, to be able to pay back their investors, and trying to scrape out $3,000 in every single unit. It looks good on a pro forma, but
especially with falling
obviously
rents.
it wasn't working at the end of the day, and that's really I think probably for the most part why the rental achievement was put in is just
Yeah.
a lot of rents were falling short.
Remember the good old days when rents were going up, not down? Those
Wow.
those were the
Yeah.
days.
We were due for it though.
Absolutely.
Yeah.
You know, we
Yeah, property values going up 30% a month, rents were up 10% a month. It was,
They're bidding wars on
yeah.
rent. We're seeing it now. Like, we have a laneway suite that we had rented 3 times for over $6,300 a month, and we're just put it on the market again like 3 months ago, trying to release it at 6, so like lower than what we had leased it for before. No offers.
how large is this?
It's
laneway
big. It's
suite?
1,500 square feet. It's 2 stories, 3 bedroom, 3.5 bath. So like it's a big spot. Obviously expensive, but it's
Sure.
in one of the best areas of the city.
Gotcha.
No problems leasing it before, and now no offers. So there's definitely been a bit of a shift.
Massive shift. You know, we're
Yeah.
seeing it like even in my personal buildings that we have. You know, where you were projecting your rents or like you're having turnover. You know, a $2,300 2-bed is, you know, $2,050. So, you know, it's not a little bit, 10%, you know, or 15% of the actual market rent. I think it's definitely the people who had nice units are thanking themselves that they spent the money
Yeah.
on doing it, because when there's opportunity for people to go get, you know, different suites at lower price ranges, if you have quality suites, at least you're going to have some sort of sticky,
Yeah, exactly.
stickiness in the market.
And that's what we try to do. Like, our whole business motto is, we're delivering above average units. Like, they're nice units. They're units you'd want to live in. You also get a better quality tenant as well. And, we want people that are going to stay. We don't want turnover every year. Then we have costs trying to release it, and it's not
You got to
worth
repaint it, release it. It costs
Yeah.
money to do it. You got 2 months of vacancy.
Exactly.
It's a whole thing. First of all, where are you investing in the city? And like, are these like, you know, all 2-bedroom units, 3-bedroom units? Like, how are you guys positioning your buildings?
Yeah, so where we're investing, we're typically more in the west end of the city, downtown. We have a number of units at like Queen and Ossington area, Trinity Bellwoods.
Yep.
We're doing one in Hyde Park now, so we try to stick to areas where, they're I don't want to say trendy, but areas that people want to live in. Good access to transit, good access to amenities. So the units we do have in like Queen and Ossington area, we have no parking because none of our tenants have cars. You can walk everywhere. Tons of restaurants, lots of bars, like good shopping. Like, it's a great area to live in. You get the park there. So we want to kind of focus on those areas. We don't want to have to provide parking because you're just giving up, potential rentable GFA.
Yep.
Like a laneway suite, for example. A lot of people are building laneway suites with parking on the ground floor, but it just eats up your floor plate, and you don't end up with a great usable living space there. Like you could if you just eliminated the parking. So that's where we're focusing on. All of our units we try to do at least 2-bedroom, 2-bath. It's much easier to rent. People can split the rent if they want, or you just have more space at the end of the day. So minimum 2-bed, 2-bath. We have some 3-bedroom units. Obviously, those are going to be a little more expensive because they're bigger.
Sure.
So yeah, minimum 2-bed, 2-bath for sure.
I think location is key, though. You know,
Absolutely.
if you have a place where people don't need a car, like, one of the major issues with, is parking in the city.
Yeah.
We were actually just talking about this before we started shooting, is just like the different opportunities that are coming either now or in the future around maybe robo-taxis. I was talking to a developer the other day who was doing a mid-sized development in the beaches, and he was talking about, should I keep these extra 3 parking spots or should I put a unit in here, and the difference between rent. And he's like, you know what, honestly, by the time I get the permits done and this thing's off the ground, it's finished, Elon's going to have his robo-taxis. People, like the luxury of having a car is going to be for people who want to spend the money on actually just driving a nice car.
Yeah.
The increased densification, you go to Europe, no one's got parking spaces.
No one drives.
Yeah, no one drives.
Yeah.
But they have better public transit than we
Yeah.
do.
Yeah. They want to build underground transit. We'll get there. We'll build a giant tunnel under the 401, and it's going to be great. Like, it'll be
15 years for
Yeah.
Eglinton
Yeah.
LRT.
Yeah.
Like,
Yeah.
We're still not done that one line. What is that? The one that has taken like a decade to
that
do.
one. The Eglinton.
Yeah.
Yeah, the Eglinton one,
15
yeah.
years.
Yeah.
Yeah.
I was in high school when they
The $1
started
billion
that.
overrun.
Yeah.
Yeah, craziness.
It's wild.
Yeah.
Wild. I
The
heard
government will build more homes for you, though. It's okay.
Yeah.
We'll get there.
the station's sinking, the main one, but it's okay.
Is it actually?
Apparently. Yeah. Young and Eglinton.
Oh my God.
It's wild.
The next scandal.
Yeah.
That's why the government should not be in development. Just leave it to the private sector to execute.
Yeah, no, it's let's get into capital. Let's get into use of debt. You've obviously acquired a bunch of different types of real estate along the way. We just touched on the MLI product, the insured products. Utilizing this type. You said you've done CMHC construction financing. Have you tried regular conventional construction financing?
Yeah, we have. We've gone private, and we've gone through your Schedule A banks with like lines of credit, HELOCs, that sort of thing. We've done private loans from friends and family, and then the first 5+1 we did, we put up some of our own money. We partnered with someone who was going to provide financing for us, but we had to get a bit of outside capital as well. Yeah. Then we went to roll it into CMHC, but yeah, we have gone the private route. But
what was the experience? I mean, I think a lot of our clients,
a lot
of our clients, they, maybe for the first project, they'll be like, I need CMHC construction financing. And then we go through and we tell them, and they're still like, no, I need it. And you're like, okay, well, we'll figure it out. Yeah. And then the second one, they're not quite as, hard on the whole CMHC construction thing. But why don't you go through, the process, your thoughts on smaller, mid-sized projects?
So good and bad experiences, of course.
Of course.
As it usually happens with these sorts of things, we weren't able to pay them back when we thought we would. Had to extend a few months because these things happen. Mm-hmm. Or our refinance got pushed out with the bank. Haven't had a great experience working with the big banks. They're not the right partner for these types of deals. Mm-hmm. You need to work with someone like a Foremost that understands the process. Yeah, they understand that delays can happen, but they get it. Like if they understand your exit strategy, they're willing to work with you. Whereas the big banks, they don't think outside the box. They're kind of confined to their guidelines, and that's it. You're not getting around certain things.
And that's like the cost of like peace of mind, which I think a lot of people don't price in, or the cost of flexibility. Sometimes people are just so dialed in on the cost of the capital, and then they give up that level of flexibility when they're doing their project. And, you don't really price in, that peace of mind of having an actual partner on your project versus having a bank with their thumb on your, on your neck, being like, where are we at? Why aren't you doing this? The
expediency of them.
Yeah.
You could be, with a semi-private lender, you could have 2 advances, by the time you even get CMHC funding in place, right? Like, obviously it depends on the project, but from the conversations that I've had, it comes down to, from the most part, flexibility and just how quickly am I going to get my money, especially when the majority of mid-level guys are a bit more tapped on capital. They don't have the excess CapEx to be able to put towards the invoices where, they need that money right away to keep their guys going versus, going to a big bank or going through CMHC. Your tranche can take, a month sometimes, depending on the size of the project and the lender that you're with. If you're a big bank or insured stuff, most guys don't have the capital to float, a project for a month to be able to get it through. And then you got to figure things out with the contractors. Whereas the private guys, if you're a QS or you're using a progress inspection, whatever it is, but by the time that report gets into the lender's hands, you're usually funding within like 48, 72 hours, depending on, again, project size, but it's way quicker.
Way quicker. And like you said, you need to have that capital available because no one is, especially on the finance side, is going to hit their timelines, I promise you.
No.
Not once.
I start every single one of my construction consultations with nothing happens as fast as you thought or as cheap as you wanted.
Exactly. That's a very good point.
Ever. Like I've had clients be like, I'm getting it done in 8 months. I need a 12-month term. I'm like, you need a 15-month term. Yeah. And they're like, nope.
Better to be safe.
Yeah. And you know what? It's always the issue is the process is so out of your hands. Yeah. The city, you got third parties, the city, reports, lenders, CMHC refinancing on the back end, your COI issuance. Like you could do everything right and unfortunately have zero ability to be able to hit your timeline.
The problem is there's no consistency either from all aspects, from financing, from permitting, from CMHC. There's no consistency. So you can guess as best as you can how long it's going to take, but it's just that. It's a guess. You have no idea. If we're building an Aplex, it's 2 semis side by side. They're literally identical units, like identical houses. And the building review from one property to the other was completely different. And like the requirements they imposed, completely different.
Different like inspectors?
Different zoning and code examiners, like that when you submit your drawings, they have to do the review and then they issue the permit. Completely different, which is like, why is there no consistency? Like the building code and the zoning bylaws are very interpretive. I always joke and say, you know, why are our bylaws a riddle? Like, why are they up to interpretation? It is this, not like, oh, I'm going to interpret it this way.
It's like taxes, you know?
Yeah.
You can do it, but if you do it wrong, you're going to jail.
Yeah,
Like,
yeah. Same with this. If you do it wrong, you're not getting your permit.
Yeah.
And it's going to cost you thousands and thousands of dollars. So it's wild, like the different interpretations you get from one to another. Because with a lot of these ones, you want to try to rinse and repeat, right? You want to scale it. You want to try to repeat as much as you can. The less decisions you have to make, the better. So you would assume, okay, I got this approved here. I'm going to get it approved here. Not necessarily.
Yeah.
Yeah, which is
Same with
it's very
CMHC
frustrating.
too, right?
Exactly.
Like your underwriter, it's like, you know, I always, obviously, you know, everyone wants to know, hey, how long approximately is my financing going to take? And, you know, you could tell them, hey, look, like, you know, CMHC is quicker. We're seeing, you know, COI turn on. But at the end of the day, like you get, you know, you get an underwriter that doesn't move as quickly, or maybe they, you know, you get someone who's about to leave on like a pregnancy leave or a holiday, and that file never gets transferred, and then all of a sudden you're waiting.
it literally
know,
never
1-2
gets
months.
transferred.
It doesn't. Yeah,
It
it'll
sits there.
sit on that person's desk until they get back into work, and then they got to pick it up. And so, you know, obviously everyone tries to move things as fast as possible. And the goal is too, obviously, to be able to build a repeatable model. And hey, look, I'm building 6 8-plexes. They should all be the same time, and we should be able to time it. But sometimes you just can't. And that's, as much as it's great to be able to interact and chat with other developers, you just have to take everything, especially timeline wise, with a little bit of a grain of salt, because you know, this guy might get his approvals within 8 months, but you know, you might be 12 months. And it's just, it's unfortunately just the way that it goes. It has nothing to do with you and your project. It's just who picks it up and who deals with it.
You're relying on government employees, which is never great.
But it's like the experience tax too, right? The first one sucks. You figure out all the inefficiencies of it all, and then you get your, you know, you got your architect now. You know, now you got your broker, and now you got your, you know, your all your sub trades. You know, you have everything then in place. You start to vertically integrate all your things, and then things do get easier as you go through. Which, I mean, obviously you can see with your progression. You know, we go from house to midsize, you know, to 8 units to 16 units. You know, it's all an economy of scale situation.
Yeah, exactly. And like to your point, like we've had scenarios with like our first one we did with CMHC, we built it conventionally and then went to refinance into the MLI Select program. So like followed everything to a T, right, to get 100 points. This was before they brought in the affordability necessities, so you could get full energy efficiency. Submit our application, and they're just like, no, we're not doing it. Didn't give us a reason
Just
why.
because.
Yeah, didn't give us a reason why. We're like, what do you mean you're not doing it? Like, we followed everything to a T. Just would not give us an explanation. So
Because his wife yelled at him that day.
Yeah.
It's unfortunate because like sometimes it's like that though, you know, like
Yeah, literally, it's like how their day is going.
So CMHC just declined to give you guys a COI.
Yeah, they wouldn't do it. They wouldn't give us a reason as to why. It gave us no input as to how we can improve. So our broker's like, okay, what if they introduce some element of affordability? Like, okay, yeah, we'll look at it. We'll consider it. So we had to resubmit this whole, and we eventually got it done, but our loan amount went down by like $600K. Yeah, which is a lot. So we went from like it still worked. Like, luckily there's still meat left on the bone. It's still cash flowing, which is great. But you know, we thought we'd get a lot more money out of it than we did.
$600,000 hits, no joke.
It's not, and then it took almost a year to get a COI.
Yeah.
There was a time when it was taking like ungodly amounts of time to be able to make this happen. They are significantly quicker.
Yeah, which is
I don't want to like promise anybody timelines, but like, you know, 6 to 8 weeks, like if you have everything together, like they're pumping them out quicker. You know, I think they've become more, obviously there are some rules you can interpret, but they are very like rigid though in regards to their policy. And, you know, to their benefit, if you follow the guidelines perfectly, you know, usually you can get your certificate of insurance, but most of the time. But the challenge is the goalpost move, you know, like, and from like a developer or even like a capital advisor perspective, when the goalpost moves, you're consistently walking on eggshells and you're trying to get everything done fast. And one of the benefits of the mid housing stuff is you can do these like 12 months, 18 months. Like you have a little bit less risk exposure to policy changes. Whereas like, you know, these bigger buildings, you have, you know, massive risk. And we've seen like 10 different policy changes in the last like 2 years. So there's inherent risk, and a lot of the times what we'll do is we'll underwrite the files with like CMHC standard financing.
Yeah.
In worst case scenario, you get your 5-year, get your 10-year, get stress tested. Like this might be what you end up with if this doesn't if things change. But it's important to understand your equity position when all the dust settles, because odds are something is going to change, and the developers who've gone through the process or have done it a few years, they kind of have thicker skin and understanding. I'm just going to adapt,
Yeah.
Like I built this thing.
Yeah,
I built this thing. I dealt with a million different things that went wrong. Whatever happens here, I'm going to adapt and figure it out. And that's kind of like the secret sauce of the mid-sized developers. Things are going to change, but
something will go wrong.
Always does. It without fail. But
and to be completely biased too, I mean, it's a great reason to work with a broker. Like,
absolutely.
Look, I mean, we work with some of the big banks that go directly to clients, and we obviously use their product. But if something happens, hey, CMHC just won't give you a COI. Okay, what do? I don't know. We don't deal with any other products other than our insurance.
I've never had a no. I don't know.
Yeah. So I mean, like to be able to have someone who can say, yep, here's your option, small and like small commercial, regular commercial, whatever it is, switch to standard. Like to be able to have someone that's there to be able to from day one work on that solution for you versus your bank your lender says nope, and then now you're hey, 2 weeks of trying to find a broker, and then that broker's got to recollect all my documents, then we got to submit in. Now you're 2 months away from from getting a file funded again or some other solution. So
yeah, absolutely. I'm gonna pump your guys' tires a little bit here, but I mean, anytime I send you guys a deal and you underwrite it, like I do like seeing all like the 8 different options, so that definitely helps a lot.
Well,
so appreciate you guys doing that for us.
No, appreciate that. Knowing your options and fundamentally understanding the risks associated with either acquisition or your takeout financing, you have to know, best case, worst case, everything in between, where you're going to pivot, because you're going to have to at some point. And there's a lot of clients like, oh, I'm just going to go direct to the bank, and then I got a call yesterday. Girl's freaking out on the phone, calling me like, I've had this file submitted with this lender for a while. They came back. The COI got denied because it wasn't new construction. I'm like, okay, well, send me. What do you mean? Send me the thing. And there's a little bit of language barrier, so she sends me the appraisal. Well, it wasn't new construction. They built off the side of another house, so just a massive addition. And then she's 6 months in, $4 million of private debt that she can't hold. And, the lender's like, okay, we'll resubmit. But she had the MLI points, so now she's got to go redo her energy audit based off of a pre-existing baseline. And the lender isn't explaining any of this to her. They're just like, we're going to resubmit. Well, I'm like, you can't resubmit. The fundamental issue is a pre-existing building versus new construction. Like somebody has to walk you through, the relationships of having an engineer to be able to talk about the baseline assessments, how that works, if you met the code, what your other standard options are. Like none of the advisory is happening at that level. So again, shameless plug, like, work with somebody who puts all the options together. But, fundamentally, these larger institutions, the First National King Sets, the RBCs, the BMOs of the world, they're so used to doing really, really big projects. The working with, I don't want to say like the normie, but like the retail investor who's getting into the space. There's such a gap of knowledge because a lot of these bigger guys, they've either done it before, they've had teams around them, they have people on staff to manage this stuff. There's so many different pieces that could go wrong, along the way, that unless you have all your ducks in a row and you fundamentally understand financing and debt structure, which, if you're going to be a great developer, you're not going to spend all your time becoming an expert in financing. You're going to work with somebody who just knows how to do it.
Yeah, I mean, you need to have a good baseline understanding of every aspect. But yeah, I mean, to be successful in development at any scale, you need a good team around you, and you need good financial partners, you need good architects, you need good builders, right? And you need good development partners as well. Like you need to know every single aspect. You need to have a good understanding of it. But like you said, you got to work with good people who are experts in their field and know the certain tricks of the trades.
Well, especially if you're paying back, if you're as a broker, like for us, like timelines of paying back, your investors are obviously something that you guys have to keep in mind as well too. And for us, timeline wise, right? Like if, and again, like there's obviously good people at banks, there's obviously bad brokers, but anyone in general, right? Like that, your relationship with your investors is of the utmost important because they're helping you guys get your deals done. You guys aren't getting deals done if you guys don't have your investors, right? And if anyone is getting the wrong advice, or you're submitting things improperly and they get sent back to you and you got to resubmit. Having 3, 4, 5 months of extension times, 12 months of extension times, like that, maybe the first one's okay, but the second one or whatever, any follow up, like your investors are going to get tired. They're going to lose faith in you guys. They're not going to put the money in. So, to be able to keep things on track, on time, at least having clear levels and channels of communication with your investors, and especially from upfront, just saying, hey, look, like this is how it's going to work. Like that's going to keep your relationship strong and healthy, and make sure they're reinvesting their money with you guys and pushing you guys forward.
Absolutely.
Yeah, the development game, it looks fun, but there's a lot of pieces that go into it, and it's a learning curve for sure.
If it was easy though, everyone would do it.
I agree. I think it's only going to get a little bit more challenging.
You just need 5%.
Yeah.
Or maybe 25.
Yeah. Flip a coin, depends. I don't know.
We can't say that.
It's funny that like, if you need the money, you can't have it, but if you have the money, they'll give it to you.
Yeah.
It's like,
Like,
okay,
please
well,
take it.
yeah, like, okay, well, you got that money in your bank account, yeah? Oh, yeah, we'll do the mezz financing, but you need the money? Oh, you don't have it? No, we're not going to give that to you.
So, speaking of the 5% or 25, like, are you guys seeing that CMHC is imposing rental achievement across the board on every single deal, or is it, hit or miss? Does it depend on, are they in a remote area of Ontario, or are they in a high density area of Toronto where absorption is a little quicker, or maybe they've been a little too aggressive on their rents?
Yeah, I mean, the rental achievement that I'm seeing are either larger projects, or they're in like areas that they were shooting for the stars on rents,
right?
Like the beaches or like places like that where you have really high rents, and they're like, prove it. The rents are falling 15% or 10%, and like we don't think you can get it. Like, get it first. Or if you're submitting like a new construction project and it's not done yet, and you don't have lease up, they're like, okay, well, I need you to prove it before we give you the capital.
Yeah, I think from everything that I've heard from the lender side too, just asking them like, where are you guys seeing the rental achievement? It is a larger project. Tends to be, from what I've heard, over 50 units.
Okay.
For the most part. But then again, like Josh said, if you're in secondary, tertiary markets and you're trying to get, first, like primary market type rents, yeah, you're probably gonna have a hard time with them wanting to waiving the rental achievement. Just higher risk areas.
That makes sense though.
Yeah. And I mean, like, there's ways to help with it, right? Like, you can get rental studies done. They're not cheap. They're about like $8,000 to $10,000 depending on who you're using. But again, like at the end of the day, $8,000 to $10,000 versus an additional like 20% into your project, right? Like, how badly do you need this high leverage? Like, I think there's just been like a misassociation of like, well, it's my right to have the 5%, whatever it is, and CMHC should give it to me. And it's like, yeah, you can, but you're gonna have to get these reports to put together the study and like support your argument here. It's not just, the numbers are here, give me the money. It's sometimes you have to support your case and fight the battle a little bit. And sometimes it's gonna cost you some money, but at the end of the day, that 10 grand versus initial 20%, like you're gonna save some money for sure.
Yeah, I mean, you should probably make sure the project works like at a conservative rental forecast. Like, otherwise, you're screwed.
Well, I advise all my clients to have at least 20% of projects. Like, have the capital. Even if you do have your 5% and you're with CMHC financing, and it takes a month to get your draw, and you have all your your sub trades that need to be paid, and you got things that got to keep moving. Like the 5% equity, it's such like a teaser number that people talk about. It's like it's not real. Like, you can't actually do a development with 5% down. It doesn't exist. You need to have additional capital. You got your 10% holdback on your project that you're going to have to float at the end of the project. You're going to have to keep your your GC and everybody moving along. It's kind of this buzzword that it's
your land is more than 5%.
Yeah.
Like, you gotta get your
exactly.
land.
Like, even if you do get away with just having 5% down, like, you need to have a reserve for when things go wrong.
You've already spent money on your QS. You got all your drawings, you got your permits. Before you get your construction debt, like you have a ton of money already in the deal. So
yeah, absolutely.
Yeah,
it's not cheap.
No,
it never is, man. Like, it's so expensive, and it's going to continue to get more expensive. I think. I don't like inflation isn't going away. you hear about the projections that they're talking about in Q2 of this year. And I was actually at the gym yesterday, and they were talking about how there's laws, and they're talking about how like 30,000 items are about to have a drastic increase in cost. Like we are about to see inflation again, and like all the costs of all the goods of the houses, they're not going down. You had the new housing minister, the new Carney's new housing minister. I think it was yesterday. No. Housing prices can't go down. No. We need to build more.
We just need more expensive homes.
Yeah. We need the government to do it.
Yeah.
Which is wild, but
it's hilarious that people thought that by voting for the same government we would have a change.
And the change is, I think it's called Build Homes Canada, and they're allocating $25 billion to fostering modular homes.
Yeah.
And the funny thing is, like from the outside it looks great, but from the broker side, I don't know if anybody has ever really knows this. It's impossible to finance modular homes in Canada. So the way that financing works for construction is it's work complete on site.
Yeah,
and
exactly.
Modular prefab homes
Money up front.
need massive deposits up front to be able to do the work inside a warehouse.
Yeah.
And then to get it to site. There have been a handful of CMHC projects that were completed last year, which were modular builds, but they didn't work out because 80% of it had to be on site first, and like massive amounts of capital had to be allocated to be able to do that. So like this dump of $25 billion into this prefab, modular home building process. It's such lip service. Like there is no financing mechanism available in Canada right now to actually be able to do that at scale. It doesn't exist unless CMHC creates fundamentally like some sort of bonding on the manufacturing sites and that they guarantee the upfront cost off site to be able to do it. Like they're just it's not possible right now.
Yeah. They love throwing money at something without an actual plan to execute.
Yeah, I'm gonna get in a modular building apparently.
Well, I think that's where again, like CMHC is great, but it's not the like be all end all of construction options. And sometimes you can't get CMHC construction financing. The term financing will be there. You're gonna have to kind of like tough it out and build with a slightly more expensive debt. Find a private lender or maybe a credit union that's willing to do the modular stuff, but you have to find somebody who's gonna be able to understand the product and figure a solution for you. And CMHC just it's as much as it is a solution, it's not solution based lending, unfortunately. Like it is. Here are some very favorable criteria that you have to hit, and we're gonna be very particular about it. But it is not solution based lending at the end of the day.
That's a good way of putting it.
Yeah. A lot of the people who listen to our podcast, they are mid-sized investors, developers, probably doing the 4+1s or semi-detached 4s or triplexes in major areas. They're either doing their first one or they've done a bunch. I think they get a lot of value out of you maybe giving them some insight as to if you were to restart the process. If you were talking to a young Padawan who's getting into this right now, what would you say to him or her about starting this process? What should you know? Where would you start? How does that work?
Yeah, pick a different field. No,
Don't do it.
Don't do it. No, I'm kidding.
Just leave my land alone. Let me buy my land. I don't want any bids.
So what I've always said is, execution is key.
Yeah.
And your biggest risk in all these developments is construction. You can get absolutely screwed in construction if you don't know what's going on. So if you have absolutely zero experience, if you've never built anything before, I would say go partner with a builder who has some experience. Even if he doesn't really understand CMHC, that's fine. If he understands building, that's going to help you a lot. Because if your builder, if you have no relationship with him, you're starting off from the bat. If he doesn't have the same upside as you, you could get screwed easily.
Yeah.
Like if maybe you want to give him a piece of the equity or a bonus for execution or finishing early, that sort of thing, while still building a good product, I'd recommend something along the lines of that. Like I'm lucky that I understand construction. I've built almost everything. So, I understand the process. I know where the pinch points are, the pain points. And it's, if you don't execute, you're screwed. Like if you have cost overruns in construction, your project may not work.
Yeah, you're burning capital on your IR and you're stuck in without a shovel, Exactly. Yeah, it can get pretty ugly pretty quick. So
yeah, or if they don't understand how to build a multiplex either, like if you have delays on site because you didn't do your fire rating properly and that sort of thing, your inspector makes you redo stuff, rip everything out. that causes huge delays and huge cost overruns, and that can end up screwing over your project.
I bet. Yeah. That's a great point. If you don't know what you're doing, you partner with a GC or partner with somebody who has experience in doing it. Like that's probably the biggest pain point.
Don't let a builder learn on your project.
Yeah.
Make sure they know
definitely.
how to build a
Yeah.
multiplex.
Yeah.
Because they're way different than just doing a custom home.
Sure. Well, I mean, we see that, right? I mean, like, especially with CMHC more so, but, townhome experience doesn't always translate into, like stick frame mid-rise, and then stick frame mid-rise definitely does not translate into high-rise concrete, right? Like,
Exactly.
CMHC is going to look for specific experience as to the type of asset you're building. And
Yep.
I've had guys that have brought me a project, and I've said, have you built? I built like 5 custom homes. Okay, what was it? Well, like me, my cousin, my brother, and like my other cousin, like I built them all. And I'm like, well, I mean, they're great homes, but it's not an apartment building, right? Like it's so,
Completely different.
yeah.
You need that experience.
Yeah.
For sure. Ryan, if somebody who's listening to the podcast wanted to watch your progress, keep track of what you're doing, do you guys have a way in which they can contact or which they can follow you guys?
Yeah, you can check out our website. It's resideproperties.ca, reside_properties on Instagram. We post stories of the builds we're working on. We're going to, once we start that 18 unit one, we're going to be posting stories of that as well. So yeah, follow us there.
Well, man, looking forward to watching it. We appreciate you guys, you taking the time to chat with us today, and we'll do it again soon.
Thanks for having me, guys.
Dope.